Hi, my name is Bob Gersh, and I'm a reverse mortgage specialist with iReverse Home Loans, a wholly owned subsidiary of Hopkins Federal Savings Bank. Today I'd like to go over some information regarding cash flow and after-tax cash flow and how using a reverse mortgage may be a useful tool in being able to maximize your after-tax cash flow. Specifically dealing with areas of Social Security, retirement plans including IRAs and 401ks and other deferred tax vehicles and other related type of pension or retirement programs. Dealing with Social Security, what you'll find is that you have various options to when you can take your Social Security. You can take it at 62, you can take it at other ages, and it's my understanding that your maximum amount you can get, it keeps increasing until approximately age 70 when you can get the maximum, so that you can decide where along the line, once you reach 62, you want to start receiving it. Now, what happens is that that income you're receiving from Social Security may or may not be taxable based on other income that you're receiving. And we will get into in this and other videos more information on that. But initially, the issue is, when should I start taking Social Security? Or if I'm already taking it, am I getting the maximum? And what occurs is that if you delay getting Social Security, the longer you delay it up to age 70, the more you can get when you do start collecting. So you may want to look and say, all right, I need income now, but I want to maximize my Social Security. So one potential strategy is to hold off collecting Social Security. Therefore, when you do start collecting, you collect more per month, and collect from other sources, such as using a reverse mortgage and taking money each month from a reverse mortgage as an alternative to the Social Security. That way, you're able to maximize Social Security and delay potentially when you start taking it. Also, a program is available that you could, if you're already collecting Social Security and you started collecting it before you reach the maximum point, you can pay back to Social Security whatever you've already collected and then recast at that current age your Social Security. So if you're at, let's say, 70, but you've been collecting for a number of years, you could get a reverse mortgage, pay back Social Security what you've already received, and start collecting now at the recast your current age. Therefore, you get more per month. So the strategy is you may be able to recast by paying back some of what you've already received and restart it and get more from Social Security than you're currently receiving, or defer getting anything from Social Security at this point and collect from your reverse mortgage each month, and then when you get to that age, when you want to start collecting, you can start collecting. So there's a way to be able to maximize the benefits or recast the benefits you're getting to increase them. So it's something you want to look at. There are pros and cons like everything else, including the issue that if you pay it back, it'll take so many years before you've recouped the additional money you're getting each month to make it worth it. So it's like anything you do, there's a cost up front versus the future benefit. And you got to look at your age and your health, et cetera, in determining does it make sense to do this. But it is a way to be able to increase the benefits. Now, briefly talking about retirement programs, you have deferred programs where if you take money out, you've been deferring taxes, you stop paying taxes. You may want to look at a program where you start taking from your reverse mortgage and holding off on taking the money out of deferred accounts, and therefore minimizing the taxes, since there's no tax event by taking money from a reverse mortgage, whereas taking it from a IRA or 401k that you've already deferred, taxes on. When you take it, you stop paying taxes. So you want to look at what mixture makes most sense to get an after-tax best benefit. You may also want to look, which we'll have future videos on, the issue that if you have various type of IRAs, some IRAs you are the regular IRAs, and some of the IRAs where you have already paid the taxes on the money, but you don't pay it when you withdraw it. You may want to be looking at withdrawing money now from a regular IRA and putting it into the other types of IRAs, which means you pay taxes now, but then you don't pay taxes later. The whole objective of this is to make sure when you are required at 70 and a half to start drawing on your retirement accounts with the minimum required withdrawal, you don't want that income to be taxable on top of Social Security, and the two of them make your Social Security taxable at that point. So you want to look at your various alternatives between the various types of accounts. So again, you may want to utilize some money out of a reverse mortgage to pay the taxes on otherwise tax deferred items, so you don't end up later on having to withdraw and pay taxes on income and then taxes on your Social Security. So again, it's a case of planning, and so you want to look at all those various items. This can get a little confusing, but we're happy to sit down with you, go over it, speak to your CPA, your accountant, whoever handles your tax events. Also, if you have anyone dealing with various estate and just investment accounts in general, to be able to put it in place, to have a plan in place to, the objective is in the long run to maximize your after-tax cash that you're getting in from various sources. And we have found that in certain cases using the reverse mortgage is a great tool to utilize along with your other retirement accounts to maximize that, either because you're drawing out of the reverse mortgage now and defer other investment withdrawals and therefore save taxes that way, or actually plan to change things around and may pay some taxes now, but avoid paying greater taxes later and avoid other penalties later. So again, it's a case of strategies, and we can work with you on that. So just to understand that this is all about trying to put you in the best position, maximize the monies that you are receiving, and would be happy to sit down with you and go over where you stand now and see if a reverse mortgage could be part of this program and if it made sense for you. Again, it's exploring all your alternatives, and we just wanted to present this as just one more alternative, and it's a case of, no, I have plenty of money now, but are you, after taxes, getting the best situation for your dollars? And we can help you work through that. So it's, again, it's a planning tool, and may be able to save you some money now and maximize your available cash in the future. So that's all for today. Have a good day. Have a good weekend coming up. It's supposed to be nice weather in this area over the next couple of days. It is Friday afternoon, so I'm looking forward to a nice leisurely weekend, and it hopefully is nice beach weather around here, and look forward to hearing from you with any questions. You can always reach us in our office, 781-202-7475, extension 700. Again, that's 781-202-7475, extension 700. And my name's Bob Gersh with iReverse Home Loans, and have a good day and a good weekend. Bye.